I told Michael I'm going to take him on the road with me to do the intro because it's awesome. I really appreciate that. So I have a few slides. It's about 10 slides, and I put this together because I meet with about, I don't know, 5 to 6, maybe 7 companies every week in the consumer mobile space, consumer internet space, and there are like 10 things that, there are 3 things that always come up. That's the first 3 slides, and then there's another 7 that usually come up. And so it's this pattern recognition. I wanted to share with you the things that you might be struggling with, or you will be struggling with if you haven't been. It's about 20 minutes, and then really wanted just to open it up for Q&A. I've had the privilege to meet with several of you, and I gotta say I'm really impressed with the quality of teams here, of the quality of your skill set and the product. You know, relative to other startups I've seen in Toronto and elsewhere. So I'm just super excited to be here in particular. And I'm also was really impressed with the quality of the teams over in Toronto. So you guys are doing fantastic here. Let me just go to the next slide. Yeah, can you do that? Oh, there we go. Thanks. So this is just a quick slide on my, some credibility. I've been very fortunate to have 3 unicorns. It's kind of the term for the consumer startup billion-dollar exit. I was fortunate to work at I left the law firm after 2 years. Didn't want to be a lawyer anymore. Any lawyers here? It's a terrible job. No, although I'm grateful that I got the law degree and I got 2 years experience because I was never afraid of negotiating a contract because I really understood everything from the front to the end. So great training, but I left and joined Snap, which is spin out of CNET. We got acquired by NBC. We went public in '99, became a $6 billion public company, NBC Internet. I was senior VP, one of the executives, working with Jack Welch on our board. It was an amazing experience. 6 months later, the Web 1.0 bust happened, and we went from $6 billion to $600 million, and we eventually sold it back to GE for $300 million. What a roller coaster, but I learned a ton. Fortunately, we made some money at the end too. Not quite the exit we wanted, but it was a great lesson that I applied later to Bebo, because timing is everything. And at NBCI, we're drinking the Kool-Aid. It's $6 billion today, $60 billion tomorrow, right? It doesn't often work out that way. Sometimes it does. So you got to be careful about timing. And luckily, after that, I joined Friendster. Amazing opportunity. I was one of the first alpha testers, and thank you. And we didn't call it social networking at the time, but what I saw, what he built, what Jonathan Abrams built, was this amazing opportunity for people to connect in a new way. And the vision that we had was, could you imagine if 1 billion people around the world actually connect in this way? And that's obviously what Facebook eventually executed on. After about 1.5 years, there were so many issues with Friendster, mostly on the technical side, the product issues. And I do everything but code, so I just couldn't fix them, and I was literally getting ulcers and knowing we were on a $100 billion market idea, but we were not going to win. One of the lessons I learned at NBCI is, if it's not working out, you leave. And I'm a loyal employee and a loyal guy, but I just couldn't do it anymore. So fortunately, I found the founders of Bebo. We just launched it. I launched it with them, and we scaled that business, and we ended up, as Michael said, selling it to AOL for almost $1 billion. And we had a clear strategy there, which was to be the largest in Europe, which was kind of greenfield at the time, and number 3 here, or here in the States and Canada. The reality is that number 3 meant to be number 1 because Facebook was going to go public. They already told Yahoo we're not selling for $1 billion. MySpace had just been acquired by News Corp. So if we're number 3 here in the U.S., then we're essentially number 1, and that's kind of what happened. And then in 2007, I saw the market downturn. We talked, I talked with the founders, and with my experience at NBCI, we thought this was the right time to finally take those acquisition discussions seriously, and fortunately it worked out well. Tango is one of my more recent investments. It's a mobile messaging app. We have almost 300 million people using the product. We just recently got an investment from Alibaba right before their IPO. They put in $225 million at $1.5 billion, roughly $2 billion valuation. So I think that's going to be a nice exit, and it's already been a good exit for some of the folks, early investors. Let's see. Oh, there we go. So it's a little bit on my background, and I could go into more detail later. One of the things that the first thing that I always talk, and some of you guys, we've had this conversation, right? So I always talk about with consumer startups. And by the way, what I'm talking about is also applicable to non-consumer startups, if you're doing enterprise or whatever. But I will say that this is particularly, of value to anyone building consumer startups. So you have to have a vision worth fighting for. right? What does that mean? What does that mean? And so number one, like, are you passionate about this? Are you the right person, the right team to actually execute on this? And some of you have been through startups before, and some of it's your first time. This is going to be the hardest thing you're going to do for the next 5 to 10 years of your life. And most of the time, things are not going to go well. And at some point, if you're not really passionate about this, if this is not a vision worth fighting for that you're really proud to bring into the world, you're going to give up. It's sort of human nature. So from an investor standpoint, I think about this better be something that you really want to do. It's something that we both agree should be born into this world, and that we have a reasonable shot of making happen, and that you're going to keep fighting when things get tough. The other thing to think about, so that's sort of one of the metrics. The other is this a big enough market? So okay, it's a vision worth fighting for. You've identified a problem. You're passionate about it. You're the right team. So what, right? Is this a market? Now, Maven Ventures, the venture firm that we started, we're a micro VC. We're it's a $10 million fund. Our check sizes are $250, $500K. We still want to build billion-dollar businesses. I mean, the reality is, it's just as hard to build a billion-dollar business as a $100 million business. So you might as well try and build a billion-dollar business, okay? So is this a big enough market opportunity that could be a very, very big business? And I say billion, I kind of use that loosely. I mean, there's nothing wrong with a $250, $500 million business too, right? But is this a big enough market opportunity that's worth fighting for? Okay, so you got yes and yes. Now the third piece where most people fail is, so especially on the consumer side, what are people currently doing today to solve this problem? Right? I think a lot of us as entrepreneurs we don't want to go there, right? Because that's usually where these things fail. It's like a lot of people try to pick on Yelp. Well, I'm going to do this, and but you can get kind of reviews on Yelp. Yeah, but it's kind of noisy, and we could do this better. Well, the reality is building a consumer habit is one of the hardest things that you're going to do. Okay? People are lazy. They don't want to learn a new app and build a new profile, and invite their friends there, and then So you've got to be doing something that's so special and so unique that it's going to drive that kind of attention, interest. And I put up, Snapchat, WhatsApp. So Snapchat's a really interesting one. People have been communicating like that for a long time. How did that take? Well, actually, what they did, and I'm not sure I'm pretty sure they actually didn't think about this before it happened, but what they did was a new form of communication for young adults, right? This ephemeral messaging was something like when I was at that age, we'd talk on the telephone, hang up, and your communication's gone forever. Well, theoretically, I mean, probably the NSA still has files of that, right? But in theory, it should be gone. And but young adults growing up today, they were texting each other, and in their paradigm, that lasted forever unless it was deleted. This kind of an interesting thing. And so Snapchat identified this. Wait, why should that be? Shouldn't we go back to the old paradigm of, it's just a quick chat, it shouldn't be there, right? Plus, on top of that, the ability to communicate quickly with a photo that you don't really have to spend that much time on is a lot more engaging. Like magic happened, right? That's really exciting for like Maven Investments, right? We love those opportunities. That was a vision worth fighting for, bringing in a new form of communication, solving a big problem that people didn't even know they had. That's awesome. WhatsApp on the other hand, also, you'd say texting, I mean, that's there's all these forms. Well, actually, their focus on international texting and costs related to that, and the ability, their product focus on making that experience work for families living overseas and friends traveling, that was enough, and keeping the costs, down or almost free was enough for that to solve a huge problem, right? In that case, their product was a million times better than other things, and that's how they scaled. I mean, a million, 1,000 times better. It can't be like 2x better, right? So when you're thinking about a vision worth fighting for, go through those steps. If you're not going to solve those 3 steps, it's probably not worth doing. So we'll talk a lot about the founding team, and I think you guys are, really well along the way here, especially, with your the teams from Velocity and Communitech, where you have a strong tech team. One of the things that we see often in the consumer space is because it's consumer, and we all have these problems and we want to solve them, and we'll often see 3 MBAs that have no technical experience doing this. And I say, guys, the reality is I lived in this as a non-coder. You cannot do this without a strong technical co-founder. Don't do it. This is a technical product. This is all about, look, the reason, one of the main reasons that Friendster failed is it didn't scale. You have no idea, you don't even know the questions to ask. You need someone who understands how to scale these businesses, who can code these businesses. For me, I love teams where one of the founders, CEO or the CTO, is actually building the product. Zuck was in part very successful, Mark Zuckerberg was successful because he was a designer coder building this product for himself and his friends. That's awesome. Every day he lived in this product. Michael Birch at Bebo was also, let me see. Oh, there we go. So Michael Birch at Bebo was also a great designer, product designer, and a good coder. He wasn't the best coder, but he was good enough. Built the product to scale to tens of millions of people. Then we hired even better engineers to build it to scale to 30 and 50 million people. His wife Sochi was actually good designer, good on product, and also kind of like helping on the business and the operations, keeping everything going. And then they hired me, and I was essentially on the founding team with them to be the sort of the hustler, doing PR, marketing, closing the financing round. So those are the kind of teams that we love at Maven. So the other thing that think about is culture, and I put this up front because most startups at this stage don't think about culture, either at all or early enough. Now the reality is, even with 2 or 3 people, you guys have a culture, right? The culture is generally the culture that the CEO has in mind, a charismatic leader, or that the teams have gotten together, and without unconsciously, it's about hard work. We're in this thing 7 days a week, and it's open. We don't. If we have an issue, we argue. We talk about it. We have arguments, but we kind of get together. There is a culture already built in your company. The good thing the good news is that you should actually, at this point, it's not too late. It's never too late, but it's great when you do it early. Sit down with your team members and write on a piece of paper the 3 or 5 defining pieces of your culture. Okay, magic will happen. Now, why is that important? Number one, it's just important because there may be some disagreements among the founding team. Great, get it out now, talk about it. Number two, even more important, when you're hiring, after you raise a little bit of money, you're going to hire some people. The number one thing you should be hiring for is culture fit before skill set. Don't get blinded by the skill set before the culture, because if you hire them because this guy's the perfect guy to do coding, they bring him in, and all of a sudden there's all this conflict and this small team, and that you have to get ask to leave the company. You're going to be spending more time, and it could potentially disrupt the whole product, the whole company, because you didn't have a culture fit. So it's something that's so critical to do. At Maven, we have 20 mentors. We run a small incubator as well as a venture fund in Palo Alto, and we have 20 mentors. And one of the mentors I specifically sought after, it was Dave Cashin, and he is a life coach, CEO coach, and a company values builder. So he takes all of my teams through a 2-day process, but it's not really 2 days. It's like an hour and a half one day, an hour and a half or 2 hours the next day. After that, we have a document. Everyone has a culture. And I'll give you some ideas of how to do this on your own, like today or tomorrow or this week. Ask yourself in previous company, if you've been working somewhere else before, what did you love about that experience? Why did you love working at that company? What was it about the culture that you loved? Just write that down. And what were the things that you hated about other jobs or other company cultures? And write that down, right? And have a discussion among your founding team members. And if you have non-founding members of the team, bring them in too, right? Ultimately, it's going to be the CEO or the CEO and co-founder's decision on this, but you want to have buy-in from everyone. Definitely worth spending the time. So we're going to talk a little bit about product market fit and growth hacking. And I could spend a lot of time talking about growth hacking. If you have questions about during the Q&A, just I'm happy to do a little bit more deep dive into some ideas around how to do that effectively. The reason I put this up here is that it's not worth doing growth hacking until you have product market fit. And maybe a lot of you guys have read about this. There's a lot of talk about this. There's great stuff around lean startup, MVP. Especially with consumer apps, it's fairly easy to build something, get it out there, test it, see what's happening, learn from that experience. You should do that, right? You guys are designing, coding this right now. Build your app, see what's going on. You have some thesis of how it's going to work. Don't focus on the growth hacking yet until you've figured out you've got some product market fit and some good, pretty good engagement. and then turn all the resources to growth hacking, right? That's really early on. Now, as the company scales and builds, the growth hacking turns to another matter, which is somebody in the company, and even if you're just at 3 to 5 people, needs to own growth. You know, at Facebook, Zuckerberg owned growth. Like it was a priority for the company. We're not going to put ads on that page if it's going to impact the growth of this company from the consumer growth standpoint, right? That's a CEO decision, right? The CEO's got to own it. And what he did really well, better than MySpace, Facebook, Bebo, frankly, he brought in a growth hacker. He didn't call it that. Growth hacker is sort of a relatively new term, but he had folks in the company whose job was to think about how do we go from 0 customers to 1 million to 1 billion.
He's a Canadian guy from Ottawa, Chamath.
Yeah, Chamath was right. He was the head of marketing, and he hired a guy named Andy Johns, who was really the first growth hacker within working for Chamath. And then they had a team, and there are a few people who from that early team are still there. Why is that important? Well, someone in the company has to own that, right? And some people ask, like, what is that skill set? And we can go into more detail if you want to talk about that. Andy actually is a mentor at Maven. He was one of the first growth hackers, not the first at Facebook. Then he left to head up the growth team at Twitter and took them from millions to tens of millions. And then he left to join Quora, did the same thing there, and now he's at Wealthfront. And I've just been so impressed with him. Maven is an investor in Wealthfront. I mean, the product that they're doing there is amazing. If you haven't taken a look at what they're doing, you should take a look. But anyway, so Andy owned that, and he had the backing of Mark. So one of the things that they figured out really on was they knew from Facebook active members, engaged members, if you invited 7 friends within 10 days, you're going to be extremely active, like one of those folks that come back every day, 3 or 4 times a day. So what do? Everything was focused around that. How do we get people engaged, and how do we get them connected to 7 people in 10 days, right? Brilliant. Well, but it only happened because that was his job. And then he would go around and evangelize to everyone and looking at the features and make sure that everyone understood that that was the metric. And then it constantly changed, right? So it only happens when you have someone responsible for that. And the other thing I want to point out, one of our other mentors is Elliot Schmuckler, who was the head of LinkedIn's growth, and he took them from 10 million to 100 million users. And one of the things that I learned from him, and he talks a lot to our teams, which is to me was a little counterintuitive, and I want to pass on some of that knowledge to you guys, is when you have an engaged user, let's say you're fortunate you've got 10 million downloads, but of the 10 million, like 2 million are active, and you've lost 8 million. They're like literally not coming back. One of the things that we think about doing, and many of us are going to make this mistake, is how do we get those 8 million active? If I could just get half of them back on and get them re-engaged, I got a massive business. It's actually a big mistake, right? What you need to do is focus on the most active of those 2 million that are still active and figure out what they're doing to get them even more engaged, because they're the kind of folks who are actually going to bring in new people and re-engage those existing people. So we all understand product market fit. We all understand growth and growth hacking. One of the things that most startups, especially in the consumer space, don't understand is language market fit. And actually I have a theory around that, is that especially with young startups, you've got mostly engineering teams, right? And even if you have one non-engineer, there's so many other things going on. This is not a priority. When you're building a consumer startup, it's just as important how you talk about this company as how you present it, how you build the product. It is just as important. And I would say that most consumer startups spend 0 time on this, right? And it starts at, what do you call this business, right? I'll give you an example. When I met the amazing founding team of Tango, like some of the best engineers I ever met, the original name of the company was Skiggle. It was ridiculous. They couldn't spell it, you couldn't say it. Like a little thing like that, take that from that to Tango, which kind of evoked the emotions that we wanted to bring around the product, was a big change. And then how do we talk about the product? Like that ties back to your vision, right? If you have a vision worth fighting for, you need to be able to articulate that in a sentence. And that sentence drives all the language market fit. What we often do with our startups, probably within the first 3 to 6 months within the incubator program, is we'll bring in a PR consultant and a marketing specialist to go through an exercise. And after about a week or 2, we have a 2-page document. So it's like an FAQ of what's the one word description? What's the one sentence description? What's the about us paragraph of your PR? We're not even going for PR yet, but we have this document because it ties back in. And I tell you something, it's a really magical experience for founders when you can articulate this vision in words. It drives a lot of your product. It's also a big relief when you go finally, you take the beta off and you're out to the world and you're getting press calling you and you've got all these press aids. You don't have to rethink every time what you're going to say about the product, right? I'm sure a lot of you guys who've done startups like, oh gosh, I got another, what am I going to say this time? No, you actually have a message and you want to just keep focusing on that message because you got to communicate to the world why this new product needs to exist or why this product is so much better than everything else. The other thing that we see, like really every day this comes up, is focus or lack of focus and how important this is. So I'll be very specific. Many companies come in and talk about a consumer vision, and then either as a footnote or right up front they'll say, well, we're actually doing this B2B and a B2C thing, at the same time, right? And the reality is, if you're going to try and do a B2C company, a direct-to-consumer company with 3 people or 4 people or 2 people, at the same time trying to do a B2B enterprise company, what I tell you, 99% you're going to fail, right? It's hard enough to do just one, right? Give yourself an opportunity to be successful here. Choose one, and sometimes you have an opportunity to do both. Like, I don't know the right answer for your business. Some of it goes back to the vision. Some of it goes back to your passion, your skill sets, where you think the better opportunity is. I'm not going to tell you, well, sometimes I'll say, this is a great consumer company. You really should kill that enterprise like I did with Tango. Their original business idea was to do white label products for all the handset manufacturers. That company would have been killed. They would probably never would have gotten off the ground. When I came in, we completely killed that side of the business, took the 3 engineers we had working on there for Samsung and all the handset manufacturers and took them and built a product for consumers. And then we hired people who had the experience to build a consumer company. So one of the other reasons why these companies fail is because if you're building an enterprise software company, the skill sets of your engineering team and of your whole team, your marketing team and everybody, is very different than the skill sets and the mindset of building a direct-to-consumer company. So when you focus, magic happens, right? It leads to your marketing plan, your PR strategy, and your hiring strategy. And when you don't have focus, you're constantly going between one and the other, and usually what happens is you do neither very well, and you often fail at both. So one of the other things, and this is very applicable here, is obviously with, and some of you guys are nodding your head. So I'm a mentor at 7 different incubators in the Silicon Valley area, in addition to running my own. And part of it is just because I love this stuff and I want to give back, and it's, and a little bit self-serving, as I could potentially meet some great early stage entrepreneurs and bring them into Maven or invest in the company. What I've noticed over and over again is what I call, I think I've created this term, is mentor whiplash, right? I'll meet these companies and it's like this great consumer social play. I know how to build those businesses. And they had a great idea and they kind of pivoted to something. It was just a disastrous idea and it's not working. And they're like, we don't know what happened. We sat down with so-and-so and like he's an awesome investor and he was like head of this SaaS enterprise business and he gave us this great advice. I'm like, yeah, exactly. He's a great, I'm sure he's brilliant at what he does, but he gave you bad advice. He doesn't know how to build these companies. So be careful who you take, your advice from. Get those mentors that know how to build these businesses. Get those investors on board that know how to help you build your kind of business. And it's not that the mentors are trying to do anything wrong. We want to be helpful. So we're going to try to do whatever we can to convince you that what we're giving you is great advice and that we're being helpful. And hopefully it is. But be careful about who it is that's giving you advice and be thoughtful about who your mentors are. And then I have just 2 more slides. Similarly, be careful and thoughtful about who your investors are. And I put up AngelList as sort of just a reminder to talk a little bit about that. Does everyone know about AngelList? Probably everyone here, yeah. So Maven is an investor in AngelList, but it's also a great platform for all of our startups and all of you guys. And we just launched a Maven Ventures AngelList Syndicate, which will have about $500,000 to invest in the seed and Series A of our companies. On AngelList, it's not just an opportunity to get funding, but you actually learn a lot. You can learn about what other people are doing in your space, what competitors are doing, who's funding, the kind of deals that you're looking at, what the deal terms look like. There's an incredible amount of data there. If you haven't taken a look, you really should. And there's a lot of interesting mentor opportunities, people who are mentoring through the AngelList platform. At Maven, one of the things that I want to do when I launched the firm last year was to be very careful and be explicit about we stick to what we know. We'll do about 15 deals a year. So 10 deals will be like a regular venture investor or an angel investor. And we generally invest in the seed round, sometimes the Series A and Series B. About 5 or 6 deals will be in the incubator, right? And in that case, we get some equity for the 9-month program. It's a rolling program. It's very hands-on. The good news is between our investment and the AngelList investment and our LPs, you generally fill out your $1 million or $1.5 million seed round very quickly, and so that you could just focus on building the business. And then we go through all those, we do the vision, the culture, and growth hacking, get the business to scale. After 9 months, ideally we're going for the Series A, and then the companies are on their own. We're always there though. And in addition, even if we're not in the incubator, if the company's not in the incubator, we're probably the most helpful investor, even though when our check size might be just a couple $100,000, because our team really knows how to build these kinds of businesses. And we only invest in consumer companies with hyper-growth potential. And so I think actually we were the first to do this, and I think that there's going to be more of this. And then there are going to be incubators and investors that are just going to focus on, well, actually, Data Collective is another one that's just big data, right? And there'll be more. I think you'll see this verticalization, and I think it's healthy, because if I try to do green tech or healthcare, I actually am really interested in that space, but I'll probably do like 3 really bad deals, give some bad advice, and learn on your expense and your dime, which isn't fair to you as the entrepreneur. And then maybe my 4th one will be successful, right? You see a lot of that happening in the venture industry, and I think you have to be careful about making sure that you have the right investors for you that can be helpful. And then the last one, I think it's a little bit of a grain of salt, but I think it's a really important point. And maybe it's one of those like it'll help us feel better. I've had my share of failures as well as successes. And I've looked back for some pattern recognition. I gotta say, probably the one thing that came up over and over again as I was thinking about some of the success stories is that, like, Bebo was probably the luckiest company I ever worked with, right? And it was awesome. Now, some of it was just stuff that was just out of our control. But when I thought about, like, how did we get so lucky, part of it was we were working really hard, right? And that's a big, we had the right team, we had the great vision, we did all the right stuff, we were working hard. To me, that's like 10%. You have to have that or you're not going to be successful. But we were doing that. But the other thing that we did is we were open-minded about opportunities that came up. And I think that some of it is just, sometimes being able to step back and take a break from what you're doing for a day, an hour, a weekend away, keeps you open-minded so that when things that are lucky happen to you, you actually take advantage of that. And it's not one of those things that you can plan on, but I think every great company has had those moments of great luck where the founder or the founding team is like, unbelievable, we got to jump on that. And it's often a very risky move. And I'll end with a very quick story about, because this is one that was just crazy. So and I think I mentioned this at the Startup Grant event. We were invited to go, pretty early on, we were scaling massively in the UK. And it was incredible. Like, there was nobody there, so greenfield. that was our idea. I was like, let's just get there and own UK, because then we'll own Ireland, and then we'll own New Zealand, Australia, and then that community, it's young, this is high school and college kids, will be really interesting for US. Like, it made sense. We did that. We worked in the UK, and we got a call to be on the morning show. It's like the, Good Morning America. It's like the massive morning show in UK. We're like, this is awesome. So here's our lucky opportunity. So we get on the show. Of course, we said, yeah, we got there the next day. We got Michael's there, he's on the show. And we had no idea that what they wanted to do was just completely, rip into Bebo and Michael about the potential issues about social networking and how dangerous predators are there for UK school children. If you think it was bad in the US or Canada, like UK was 10 times crazier. And we had no idea that they were bringing on the show the internet expert from the government. And so Michael shows up, and he's all relaxed. He's a funny guy. He's a relaxed guy, long hair, hanging out on the couch. And like the first question was, so how many predators are there on your platform, and how many kids have been molested in our UK schools? And he was just stunned. We prepped him, but we didn't prep him for that. he was about to, I don't know what he was going to say. He was about to say something, and just fortunately, the internet expert they brought on was actually quite favorable to Vito. She's like, I spent last night looking at the site, and actually, Michael, before you answer, I got to say, you guys did a really good job on all the security issues. I mean, you really are thoughtful. You partner with all the right people. Actually, it was amazing. Completely took the conversation to another area. The traffic was massive after that. We still had issues with some of the principals in the schools. But so what did we do right? Well, we actually did spend a lot of time on the security issues. Like, we were well prepared. Fortunately, it was recognized by an expert. And then immediately after the show was over, I called Michael. I was like, great job. Hire her. Get that woman on our team. And he did. And she became our internet expert, and it was an amazing hire for us. So again, lucky, but we did the right things to get there. And sometimes you guys are amazing team with a great vision, great product, and it's just, unfortunately, you were a little too early in the market. It happens, And I think, like, I mention it because it's just nothing that you guys did wrong. Maybe it's not going to work this time. It's time to let go of that idea, pivot, go on to the next one, right? Don't let it frustrate you. The best advice I got from the former CEO of NBCI, who was the VP of Biz Dev for Jack Welch, he said, if you're going to do the startup stuff, like, you should have a plan 5 over 10 years. If it's not working after a year or two, you got to kind of move on to the next thing, whether you're an employee or a founder. And I think that was really good advice. So that is my chat. I'll leave this up here. I do tweet often, and feel free to follow me, and I communicate through Twitter. Thank you.
You've been impressed by Toronto. You've been impressed by Kitchener-Waterloo.
Yeah.
Have a seat.
Okay.
So what are the 3 things that occur to you that we should do differently in order to get the message out and to change the attitude of investors outside of the country to get them to invest in companies here?
I mean, I have some ideas, but I think maybe you guys might have some ideas. I mean, I'll say one of the things that I'm seeing 3 days into this, right? Like I said, I'm really impressed with the quality of teams, entrepreneurs, and ideas. And one of the theories I had is, I bet what I was saying is, I bet there were a lot more consumer startup ideas here that are hatched here with really great designers and developers, business-minded people, creative people that never see the light of day because you're pressured into shifting to an enterprise or into thinking about revenue too soon. And you're never going to build an Instagram or Snapchat if you're forced to do that. And it's sort of the market dynamics here. And so I thought, maybe I could be helpful here. I mean, if I could come in and help fund a company for a year or two and bring in the right investors that know how to build these kinds of companies from Silicon Valley and elsewhere, even have the companies come over to my incubator for 6-9 months and then come back here and build the rest of the team. That could give you, in the consumer side, a fighting chance to actually build the next Snapchat or Instagram from here. And there are examples. It's not totally fair. I mean, Kik is an example. I mean, there are some examples, but there should be a lot more, right? And I think that I see a lot of the YC companies that come out of here are very enterprise focused, very revenue focused. And I think that's probably part of the problem, is that the capital just isn't here, especially for the consumer side of businesses. And I want to help change that.
What are the differences between your preconceptions? What were your preconceptions of the region? And what do you think now?
I really didn't know what to think. But I got to tell you, seeing Mars and Communitech and Velocity, like just seeing the physical space and the quality of people, I think you guys are actually on the leading edge. There's actually more innovation here in some respect than even in the Mecca, the capital of Silicon Valley. Obviously there's YC and there's a whole bunch of other incubators that are happening, but having there is no, and I don't know, like the Mars versus whatever, but like having that kind of massive space in the middle of Toronto, that's crazy. That's amazing. I mean, it's like a stamp of, we are about start. This is the heart of our city. It's a massive building. Having this kind of community here, is phenomenal, right? It's such a you guys know better than me, but like having other founders who've started companies, just to tap into the wisdom, and then having a place where mentors can come and help you and give you guidance and advice, having a place where investors can come in an efficient way to look at new startups is a godsend.
How many people have questions? Oh, okay. Get a question ready. Okay,
one right here.
go ahead, Wes.
Oh.
Sorry.
Okay. Yeah, so it's a good question. So is it okay if I sit? Can you guys see in the back? Is that fine? Okay. Look, one of the key jobs of a founder is fundraising. Okay, I mean that's one of our filters. Like, I'm really helpful with your seed round. I'm really helpful with your Series A, but I don't want to do it for you because you've got to do that, right? That is a skill set, and it's got to be something that you're either good at or you're going to become good at, or it's going to be very hard to build this business, or someone on your team, right? So to the answer to the question, I'd say from day one, you're thinking about fundraising. Whenever you're pitching a mentor or a potential investor who's just there to give you advice and talk, you are pitching for fundraising. You should know that, okay? Whenever there's a friendly investor call that's like, hey, I just want to check out, see what's going on, and you give them the pitch, you've just pitched them. And if they say no, usually that means no, forever. So be thoughtful about that, you know? By the way, it's also a good thing to pitch them early because they're very likely not going to say no, and very early they're likely not going to say yes, but you've given them a sense of, you know, we got our shit together. We got a vision, we articulated it, there's a big market, this is worth fighting for, nobody else is doing it, or no one's doing it. You know, like, they're like, wow, this is a great, I love it. And if you could see the excitement, they're leaning in, they're passionate about it, maybe you'll get a check right there, but maybe likely, you know, when you got the product some kind of traction or scaling, you've already got a relationship with them, that's a much easier conversation for a seed or Series A. So usually I say what happens is, and I mean, maybe it's probably the same out here, we're talking about this in Toronto as well, you know, your first money is probably going to be through an incubator, you know, accelerator / friends and family, people who know you, trust you, want to support you, you know, enough to get you a little bit of a salary and hire a few people, one or two, you know. A lot of it you're bootstrapping, you're working for half of what you could make elsewhere. It's just, that's startup life. It could be for 6, 12 months. You know, on the consumer side, we get excited about a vision we're fighting for that I've also been thinking about. If it's really early stage and there's no traction, I've invested in companies like that, generally with founders that I've worked with before. If it's someone who I haven't worked with before, but it's a vision I love and I've also thought about, or maybe I haven't thought about, but I think I agree with, you know, what you're doing, then I often would say, I just want to see a little bit of traction, you know, especially if there's some potential issues. Come back when you have a few thousand customers, you know, a few thousand members doing stuff. And then we look at the engagement metrics. And there's actually some certain metrics you guys should know, like the daily active users to the monthly active users, over 30%. That's a pretty healthy sign. You know, a Snapchat's over 70%. You know, people coming back every day. You know, do you have half the people who are using it come back every day? That's really interesting. You're building a daily consumer habit. Wow. You know.
So what are some low thresholds on that? You mentioned 30%, or what? You know, where does how's your excitement meter in terms of that ratio between daily actives? Let me try it. 5%.
Look, I mean, well, here's the thing. The reality, I think 30% is what gets you excited.
Yeah.
But if you were a great team, great vision, and I actually looked at the product and said, I think I know how I can help you, you know, and I may or may not be right, but if I think that I or my team, my mentors can help you, hey, let's talk about coming in an incubator here, or hey, you know what, I'll be happy to, you know, fill out your seed round and let me come in and help you get to that 30%, because it just might be they have focused on the wrong metrics.
So I know you mentioned the cultural fit. I'm just wondering how you also have that, but also have diversity.
Yeah, so
what was the question?
So having diversity in the team is a great question, and it's obviously it's a hot topic and a worthy conversation finally in Silicon Valley, and I think that having diversity it absolutely lends itself to having a great culture, right? You know, it's there's many examples, but I'll give one that came to mind. There was a team of 3 guys who came to pitch Maven recently on a pretty interesting idea around women's fashion. Okay, and so this is an easy one to pick on as far as, you know, diversity. It's like, okay, so they pitched this, and one of the things I said, like, why are you guys doing women's fashion? And one of the guys was like, well, my girlfriend is always doing this, and I observed, and like, well, do any of you guys care about women's fashion? No, but we think if we scale it, we might be able to get into men's fashion. I'm like, okay, let's stop for a second. And then if you're going to do this, maybe you should have someone who actually understands this industry, maybe even a woman involved in the founding team, that maybe you have a higher chance of success, you know? And that's like an easy one to pick on, but there's a lot of those examples out there where diversity is necessary. You know, frankly, when we were at Friendster, one of the challenges of Friendster is we were mostly 30-year-olds building a product for teenagers, right? So it was like, it was crazy. And we, you know, whereas Zuck was building the product at 18 years old for himself and his colleagues.
Right.
When you start like getting more fundraising and have more investment in your idea, at some level you're going to lose some control of the product that you have. What's the balance here? What's your idea? How we can keep the control and at the same time raise money? Because I heard that Mark Zuckerberg did that.
Yeah.
He's going to have the ownership of the
That's right. Yeah.
So the question is about.
Yeah, the question is, look, when you're raising money, at some point, you're going to be faced with the decision. You may not be, but most likely, do I take this money and lose control of the company? So a couple things on the control, and I don't want to get into too much detail, but you know, and I'm sure you guys have great lawyers that help advise you, and this is a question you should talk in great detail with your attorneys who come in here and mentor. But there, you know, there's two things around control. One is like control of the stock or the equity. Do I have 51% of the stock? The other is actually maybe even more important, which is, do I have control of the voting shares or the board, right? So control is a loaded term that you should, as you know, I'm not a lawyer anymore, but you know, I'm practiced law anymore, but I lived in this world, right? So you should make sure that you really understand what it is when you're talking about control and giving up control, because you might get funding and give up equity in the company where you don't have the equity control, but you can actually design ways to keep control of the company. Okay.
And
so
is that acceptable to a Silicon Valley investor?
well, you know, I think that depends again on a lot of things. If you're Facebook and people are throwing money at you because they just want to get in a hot deal, you have a lot more leverage to control how the terms are going to come out versus a company that is doing okay or struggling or even doing well that wants to get the top tier VC. They're going to come in and potentially have, you know, a little bit more onerous terms. But look, the reality is, you know, I mean, I think some VCs get a bad rap. Some deserve it, but most VCs, we want to help you build your business. We're not out there to like get control because we're control freaks. And frankly, I love companies. I want the founders to be in control. I want you guys to run. One of the lessons I learned when I was at CRV for a year, Charles River Ventures. They were an early investor in Twitter and Pebble, and I was there for a year doing an entrepreneur in residence. And I was very fortunate to work with some great companies there. I never started a company. What I ended up doing was I started a company. I found two engineers and a product designer to start it with me, and they wanted to actually run the business. They said, how about you just mentor us, and we'll give you a lot of equity to help you do that. And you only have to work 2 days a week, and you know, you can invest. I'm like, that sounds great. So I ended up, you know, doing this. And you know, the thing that was interesting to me is that, you know, what I learned from that experience is I had to give up control because I wanted them to take this business, the idea that I had, and run with it and build it into a big business. And fortunately, the company was called Jambo or Social Gold, and it was the largest payment platform for the social web for like Zynga before Facebook credits. And Google ended up buying the company for about $100 million. That was awesome. And they ran that business after 6 months of help. So most VCs want that. Now, sometimes they have to get involved, you know, because there are issues, right? And that's when they want to protect their interests because they, you know, they've invested tens of millions of dollars potentially, and that's where the discussion has to come up.
So one of the benefits of the startup grind encounter was at the conference. We had you in the chair. We had Ariel Polar, who's also was an early investor in Odeo, which was the sort of the precursor to Twitter. And then we had George Zachary from Charles River, who was also part of that. And we got sort of 3 points of view on on that the early pre-Twitter or the conversion to Twitter. And I found it inspirational in that nobody kind of knew, you know, that this was the gem.
Right.
And in fact, at some point, and we have Ariel Polar, who is, you know, part of this story in a Google Hangout here next month. So, you know, you'll get another point of view. But tell us a little bit about that, because often, you know, the pivot, you don't know what you've got. You know, that's worth fighting for. That's worth working through.
That's right. Yeah. Well, you know, look, the valuation that Twitter came back in at CRV when I was there, I don't remember the round. I said it was Series B, but it's probably Series C or D because they already had done a big fundraise for Odeo. So if you remember, Odeo was like a podcast company. The founders of Twitter pivoted. It was a failure. They gave back most of the money. Some of the investors, they just said, you can have stock in this new thing we're starting called Twitter. And Charles River Ventures was lucky enough to get some of that early stock. And then they were given the opportunity to co-invest in, like, I don't remember, it was a $200 million-ish round, which was a lot for a very small company with a lot of problems. I don't know if you remember, who remembers the early Twitter days, like the fail whale, right? It just didn't work. And a whole other discussion is like, why didn't someone out Twitter like Facebook did to Friendster? It's actually very interesting, if you think about it, like that should have happened. But anyway, they eventually succeeded. But at that time, it wasn't obvious at all that this was going to be a multi-billion-dollar business with hundreds of millions of people highly engaged. And very smart investors passed on that deal, and you just never know. Now, we do have more knowledge now about some metrics. Like I think if they had done a little bit more diligence on the metrics and we'd known more about, 30% engagement, this many people coming back, I think, it helps you get over that huge valuation hurdle.
Right.
Today, because we have more companies like that, but, it happens.
Yeah. Jim's an investor in, I'm going to get to your questions, but this is my last question. Jim's an investor in AngelList, one of 27 who came into the Series B. So, I think that's some insight in terms of his connectivity in the Valley as well. So how is AngelList going to change the world? And how could it change, Toronto and Kitchener-Waterloo?
I think you guys should maybe partner with, do an AngelList event here. One of the folks, I'm doing my syndicate with Gil Pacina. I don't know if you guys know, he's like the most prolific AngelList syndicator. He has about $20 million in 4 different funds that could do several deals a year. I mean, he's got essentially a $100 million plus venture fund through AngelList. It's game changing, right? And he's just one. We have $500,000 per deal. We could do 2, 3, 4, 5 deals on AngelList just for Maven. Right? This stuff is absolutely game-changing, and it's not just C deals now. There's A and B, and you're going to see AngelList raising money, having a fund of funds, investing in funds, investing directly in companies. It's definitely changing. It's changing the whole landscape, and I think there's great opportunity for this area, for Toronto, for Waterloo, to be involved in that. And one of the ways to do it is have Naval and Gil come here and talk about it.
I've invited Naval several times as well.
So I'll see if I can help him.
So you mentioned that Tango, before it was Tango, you invested in them and you changed it to Tango?
Yeah.
Basically, it sounded like they were changing the whole business plan to move forward. So
Yeah.
invest in it.
It's a good question. I had I'm very upfront with all the companies I work with. I'll be very honest and say, here's how I see it. I could be wrong. I've been right in the past. I've been wrong in the past. But if you want me involved and you want me to invest, here's, I think, where the company needs to go. So before I put the money in and before I put my time in, I had a commitment from the founding team that we were going to look for a new name. I mean, they never guarantee, but yes, we agree we're going to look for a new name, and we're going to seriously consider pivoting away from the enterprise, relationship deals to this new path, focusing on consumer, with one caveat, that you can help bring in more seed money so we have enough money to last for another year and a half, right? So that was fair. I said, great. I think I can help sell this vision. So actually at Tango, I was actually a COO. I was the acting COO. For the outside world, I was their COO. There were 4 of us on the executive team. And the reason we did that is because, when I went to pitch my friends in the venture community, it was much more credible if I was a founding team member, even though I was really like an angel investor advisor. And then we pitched the vision. It was fairly easy, it's never easy to raise money, but relatively easy to raise a good round. And then they said, great, let's change the name, let's do it.
So what did you see in the team though that made you?
So good question. So, great engineers. So the one thing I can't do is code and build product. I have to rely on my teams to do that. Like, they built great product. They had worked together before in a previously failed startup, but similar space communication. They learned a lot. The CEO was like a 4-time CEO. Never had a big hit, but did okay. Still hungry, but lots of experience. And they were coachable. And I want to be careful about saying, like, they didn't listen to everything I and the other mentors and advisors said, but they were open-minded, and they listened to a lot of it, and they were willing to change and compromise.
There's a woman.
Okay.
Oh.
Okay. So the question was, why did I join the Tango team? Like, what did I see in that founding team that excited me?
Are there any more questions? Yeah, go ahead.
I was wondering if you had any advice in breaking the vicious cycle of eating engagement to get more engagement.
Of eating engagement to get
Needing
oh,
engagement.
so needing engagement to get more engagement. Why is that a vicious cycle?
Yeah, it's kind of like 22.
In what way?
So when people come into your website, they want to see that things are happening, and then they'll get engaged. But
Right.
of course, you need that engagement to lure them in as well.
Right. So I don't know. What is it that what are you guys doing, or is this a generic question?
It's more generic.
Okay. And because I don't want to put you on the spot, but it could be helpful if it was a specific. So one of the things that when I see that, I usually go back to the original slide, right? Is this a vision worth fighting for? Like, are you really solving a problem that is a big market that needs to be solved? Because what happens is often, you built a great product, and it seems like in theory it was a problem that we're solving, and maybe it was a problem for you. But when you really look at it, it's something that people are solving elsewhere. It's like, Yelp, Craigslist are good enough. Right? I don't want to learn a new habit. So that I do my diagnosis first. Now, if actually it's not the case, then I look at, what are you doing in the product? Like, when we look at growth, there's like two parts of the funnel. There's the top line. So there's just, top line growth. How do we get more customers? And I don't like the word term users. I like members, customers. This is a personal pet peeve. We're offering the product for free. They're not using it. We're giving it to them. They're our customers. It also builds a relationship with who is part of your product. You want to have a deeper relationship with someone who comes and uses it and leaves. So, what is it that you're doing on the top line that may or may be hurting your engagement, right? What are you focusing on? Is it the top line growth and not engagement? And that's a tricky thing. There's a lot written about that. When is it time to focus on top line? When is it time to focus on engagement? And to me, it's always a balancing act. It's not like 100% here and 0 there, right? Sometimes it's 80% there and 20% there, and sometimes it's the opposite, right? And then looking at the engagement metrics, like what is happening, I can't answer it like in a generic sense, but if you want go through the specific product, maybe just pattern recognition can give you some advice on things that I would look at. But again, it goes back to the growth hacker as well. Someone on your team, and hopefully it's you or the CEO and founder, is actually focused on the metrics, right? The one thing about the growth hacking position is it's one of the most, if not the most important position for consumer growth companies, especially early on. And it's really, unfortunately, not a very sexy job. It's really detail oriented. Andy Johns he's not a coder. He's a product manager who's just really bright, creative thinker, but especially detail oriented. Spreadsheets, testing, constantly A/B testing. And what works, just focus on that. And he works well with engineers. Sometimes you can get a great growth hacker who's a great engineer, who can actually go and build the stuff himself. That's even more efficient, because then as long as they're also diligent, making sure that they're testing and focusing on what's working and stopping what's not working, right? And sometimes it's just a marketing person who's really creative, who can work with a product manager and an engineer. It's the least efficient, but sometimes that works too, right? And sometimes you got the 3 skill sets in one person. So this is kind of nirvana. It's hard to find, but it's possible. Yeah.
First of all, thanks for your time, Jim. You've been
Sure.
very informative. It's great.
Oh, cool. Thank you.
My question is, when is the right time for an idea to be presented to an investor?
Yeah.
Like, is it worthwhile to the individual or the investor to be talking while it's just an idea?
So it's a good question, similar to, and maybe I'll be very specific on, you really have to be thoughtful about that. Because like I said, if an investor, especially a venture investor, you should really know who your investors that you're talking to are. If they have a seed, if it's a big VC, but they have a seed fund and they do $100,000 checks and you're really early and they want to take the meeting, it's probably worth the time to do it, because they actually could invest 100, 200K, right? If you're not at a place where they're going to, the large VCs, they need to put $5 to $7 million to work. You're a 2-person team. Like, most likely, you're not going to need that, right? You don't want that much money. You don't want to give up that much on a $6 million cap, right? So be thoughtful about who it is, okay? Now, if it's someone in your space who is a venture investor who has like a micro VC that writes $250,000 check or less, okay, and that does early stage investing and does your kind of deals, you should talk to them if they want to meet with you. And the best way to meet them is through a personal contact, right? Have someone who they know pretty well or very well say, you've got to meet these guys. This is like the best engineer I've ever worked with. He's brilliant. I think he's onto something that you like to do. I'll take that meeting, right? So the meetings we go with almost pre-filters those kinds of introductions from people that we know very well. And then be thoughtful about, like, here's what I do with my, I'll be very honest, here's what I do with my companies. We have a spreadsheet of all the investors that are likely to invest in this company, from angels to micro VCs to VCs at different stages. Like, here are the people who are definitely interested in the seed, here are the people who are only interested in the A, and here are people kind of in the middle. And then I'm very strategic about who we talk to first, right? So I spend probably a good 2 weeks with all my companies working on their pitch deck, making sure that it's in pretty good shape. There are people who actually don't believe in the pitch deck anymore. I do, because I think it helps you articulate your vision, period. And if you have good traction, that's even better, right? Because actually, I put that up front. Hey, here was an idea we had. It's working. You want to know more? We're happy to tell you more, right? But for a seed investor, that might be just enough, okay? So I work with them on the pitch, make sure that's good. And then what we do is we take it to some of the investors who are friends of Maven, who they're not going to invest in this company, but they could be helpful on advice, right? So we'll do like 2 or 3 of those, and really what's miraculous is your pitch deck will improve 1,000,000 times. Like, these are people who do this all day long, who give you great advice. Why did you put that slide there? It should have been second. Why didn't you talk about this? This really brings your company, differentiated from this other company. And then, after 2 or 3 of those pitches, you've now got a great pitch deck. You also know all the tough questions that any investor is going to ask, and you know how to answer them. Now you're ready to talk to the serious angel investors who are in your sweet spot, who you think are likely to invest in the company. So actually be very strategic about it. Yeah?
Okay. Is there anything that Tango, Evo, or Friendster did specifically in growth that was able to kind of propel it to where
Yeah, so actually, I'm going to add a slide to the growth, because this comes up a lot. So thanks to you, I've got a new slide in here, but it'll be a quick one. So the slide is, there's no silver bullet, okay? So because we all want to grasp onto this notion, just like, if I just knew how Instagram grew, I could apply that to my Instagram-like product. So the truth is that there are certain base metrics on growth. Like, there's certain techniques that you should all be doing and trying. And most of you probably know, like the invite functionality and right? But the real win comes in to you being creative to your product, right? The magic of organic growth for consumer startups is, how do you think about your product and your product vision in a way that makes it so that people who use and love your product want to invite other people in, right? Nirvana, like the easy answer, and it's still hard to do, but when you have a company like Tango, where it really only works when you invite another person to communicate with, that's awesome. Now the trick was, how do we go from 1 to 1 to 1 to 3, or 1 to 6, right, or 1 to 10? How do we get people not inviting just their best friend or just their mom or grandkid to a little wider group, right? And if you just focus on that, you start showing some really interesting engagement metrics. So if you have a product that lends itself to consumer growth to start with, that's awesome. And then it's just a matter of focusing on how to keep improving, right? And sometimes, we have these really detailed mentor sessions with some of our, like Andy Johns or Elliot Schmuckler, and they'll go through, they'll show you spreadsheets of, here's what we did at Twitter, right? And it was like this little, sometimes it's just a little change of a button or language, or not asking for an email upon sign up. When you have growth going in the right direction, little metrics along the way make significant changes, right? So it goes back to paying attention to the detail. And sometimes you actually have a massive win, right? And then he talks about his massive win at Twitter was the way they were it's so crazy, but the way they were asking you to sign up for your username just confused the hell out of people. I can't remember the exact language. Actually, if you remind me, I could send you the slide that he talks about this. And he just did some testing on that. And then I think what he ended up doing was just taking that off and having, he changed the notion of username for Twitter in a way that dramatically increased the sign-up numbers, which was, they'd never seen anything like that. Sometimes you find the silver bullet.
Yeah, so what are you doing now versus, yeah.
Something like
I
that.
remember that.
And actually, I'm almost hesitate to give that, because most of the time you don't find that. What you are just, you're grinding it out, and you're showing incremental growth. And I think, did I mention about what, I'm not sure if I mentioned in one of the meetings or if I mentioned here about what really interesting insight on growth. Elliot Schmookler from LinkedIn, did I mention what he said? So this was totally counterintuitive to me, and I've been doing growth successfully at startups and as a venture investor for years, and I had never heard this. So let's say you have 10 million customers downloading your product, right? You're really fortunate, you got to give, but like 2 million are still active. Did I mention this?
Yeah,
I did, okay. So good, so that one is really, really important. Focus on you have 500,000, 50,000 people, 1,000 are really engaged. Just focus on them, right? What are they doing? How can you increase their engagement? That will actually lead you to more growth than anything else you guys can do right now.
All right, well, listen, it's 1:15.
Okay.
To get you on a plane. We got.
I could stick around for a little bit.
Another meeting for you
Oh,
after
after this one, okay.
If you have additional questions, we're happy to get them to Jim. I'm sure he's happy to answer them. He's great on Twitter, so it's at Jim Scheinman.
I got it there.
And at Maven VC, so hit him up that way. Startup Grind is about educating, inspiring, and connecting. So I hope you got a chance to get some insight into growth today. Hope you got a chance to sort of believe in the potential of what you're doing, but also about connecting, and not so much about connecting sort of the valley or whatever, but connecting amongst each other. Because it's really about dealing with the grind as much as anything else. So make sure that you sort of exchange cards or a point of view with somebody in the room before you leave, and set up an opportunity to kind of talk about what you're doing.
And if I'm not available, because we have some meetings, but I think after the meetings I might be available around 2. If I'm not, for whatever reason, one of my other investments, a company called Zoom, it's like Skype but better. I'm happy to do Zoom video calls back in Silicon Valley so we can go into more detail about product stuff. And happy to stay in touch. Some really, really great companies that I was able to meet today. So thank you very much.
Thanks, Sam, and thanks, Wes, and everybody who worked with us.
Thank you.